Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to do our daily technical analysis update of commodities. We'll take a look at the dollar, 10-30-year yield, precious metals, and all the commodities that I follow. If you guys need help investing, join our community over in the finding-value.com. We've got a community going on there, the Platinum membership, where we meet on the weekends. You know, some of us, we sit there and talk a little bit before the meetings, just kind of shooting it. And we go over the entire market. I answer a lot of different questions of specific companies, big overarching questions on macro type environment. But we have a Platinum question answer session, 5 p.m. Sunday, Mountain Standard Time. And you can see where that is once you sign up. There's a Zoom meeting at the upper left. You can just click that and it brings you right to the Zoom meeting when it's underway. So let's dive in here. I'll give you my financial opinion on what I'm seeing in the markets, and let's dive in. So here we go. So I've got up here the DXY. The DXY is continuing to strengthen with that rate hike increase, and with the I'll say the openness for the Federal Reserve to continue increasing rate hikes out into the future. The market is perceiving that there could be further rate hikes, more dollar strength in the short term. So in the short term, we are digesting this with a stronger dollar, 0.77% up for the dollar, which means that we're going to see some headwinds for dollar-denominated assets because commodities are priced in dollars, dollars becoming more valuable against other currencies are what impact money flows. So we're seeing a little bit stronger dollar on a relative basis. That's what we're seeing there. And we're going to watch and see where this thing heads next. It very well could break to the upside with the strength in the Fed speech yesterday, with more tightening coming ahead of us and potentially larger tightening even. Looking at the 10-year yield, again, we're up 1.6%. That's a pretty big day for yields, and we're moving on higher. So there we are on that support level. We're bouncing off that support level, moving on higher today. We do have a little bit of momentum loss. That's why it's a red candlestick. It opened and gapped higher and came back down throughout the day, but we're still above the resistance line. We are still in an uptrend at this moment. Bond prices, remember this is yields. Bond prices are heading lower. We came up and hit that support line and are turning lower. Again, we gapped down in the morning and came back up a little bit throughout the day. So the momentum is to the upside, even though we were down on the day. TYX, which is the 30-year yield, is also in an uptrend, and we are moving higher, gapped higher, momentum down lower, coming towards the support line. But the momentum is still higher. The trend is still intact for higher interest rates on the 30-year yield. When we look at the TYX to TNX, we are heading lower. That is generally good for oil and those types of investments. That's usually what it correlates with more inflation. And when the 30-year is underperforming the 10-year, the curve is inverting. And an inverted curve usually is a inflationary environment. And oil does pretty well under those conditions. Gold doesn't do as well when this ratio falls. So this has been from early 2020. It's been a game. That's August of 2020. It's been a game of oil. Now, when this peaks and we start to come back up, think of it as 2018 here, and it goes up higher. That's when gold dominates. And right now, if you look at the big picture view, we are very low in this ratio for the TYX TNX. We are inverted, so to speak. So inverted, those types of inverts. And when this goes and unwinds and comes back up, that is when gold, silver, platinum, and all these other ones generally do very well. So we're coming up to those conditions that gold, silver, and platinum do well under. It doesn't mean that we can't have, a capitulation bottom and then turn where we've got a scare out of everything. But generally, we are very low. I would be looking at precious metals in general for potential additions. The CRB index, we're heading higher today, or no, down lower today, 0.83 lower. We're right below that trend line, and we're using that as resistance. We're hitting our head on it. So that's what I see in the CRB index. The CRB to S&P 500, the S&P 500 was down more than the commodities index, and we were up today. So that's looking good. And we're kind of just in this sideways channel, moving sideways at the moment. Gold slightly lower. We do have a wick at the bottom. It was looking pretty grim in the beginning of the day, but buyers came in and bought it back up. So we're still holding this support line. Now we got to see which way we're going to go. Are we going to break down or are we going to break higher? We do have a lot of resistance above us that we have to work our way through. Doesn't mean we won't do it. It's just there's a lot of resistance above us. Silver heading higher, looking good, putting in the nice good hammer candlestick. You grab the little hammer down here, which is the handle, and then there's the hammer up top. You can start hammering away. It's usually a bullish sign where we could turn and move higher. Broken down trend, moving sideways, and then usually we work our way on up. So I still think silver looks very good. Platinum getting a little bit more selling pressure. We broke out. We always can do a return move. We've been doing return moves in platinum all over the place. We've been going up and down all around. But overall, when you take a big picture view, I think this looks incredibly bullish. We're still in this pattern depending on how you draw the pattern. If I were to come in here and draw this pattern more towards the top of the lines, we haven't broken that yet. If you use the closing prices on the monthlies, we have broken that. So debatable if we've broken it in or out, depending on what you use. This is on the daily candlesticks if you use the tips. But right now, we could move sideways a little bit longer before breaking. And then if we break, we could see a big move to the upside. And we usually break out of consolidation patterns to the upside. We've broken out. This is a false breakdown. We've broken out. We're consolidating on top of the pattern. And usually that's very bullish in a falling wedge formation like we've got for a move higher. Looking at the XAU to gold ratio, we are still heading lower. If you guys were part of the Platinum membership, I talked about this a little bit, but we're back inside this. And right now, we have not seen gold and silver miners break out of any, we'll call it long-term important trend lines yet. I do think it will come. GDX, the ETF, heading lower, down 2.45%. We're still in that zone of support resistance. SILJ also in the zone of support resistance. It's above support. We didn't really have a large down day today. I think silver is probably the spot to be looking over gold. And remember, silver has industrial uses. It's the #2 commodity in the world. We've got shortages out ahead of us. We've got inventories declining. The utility that silver brings to the table is immense, and we're right at the cost curve of silver. Silver's cost curve is about $20. We're at $19.50. Commodities bounce off the upper end of the cost curves, the high cost producers, which is about $20, $21, $22. And they go up when the supply-demand imbalance happens with large deficits. And then it's whatever demand can take. That psychological threshold of demand. Crude oil heading a little bit lower today, down 2.18%. And we've broken this downtrend. We still have a higher low. Nothing's broken or anything yet. Still looks bullish to me. Natural gas also heading lower, and it's consolidating in a sideways type movement in a flag formation. This guy's flagging out right now. So that's usually a bullish formation for a break higher over time. Still looks good to me. And the thing that gets me very interested and excited here, we had crude oil down 2.2%, natural gas down 5%. But we've got, you know me, XOP hitting it off the support level, We all know where this support level is. If you follow the channel, we know where this is at. Support level, and we've got a bullish piercing here. Bullish piercing there and another one here. So what that means is that we gapped lower and buyers came in and bought this up throughout the day and pushed it above the 50th percentile of the candlestick before. This means, usually, statistically speaking, that we've got a potential move higher and we can jump off this support level. So that is very exciting because we see the strength in XOP. We see the positioning of everyone buying this, even though crude oil and natural gas are down today. We're also seeing it in energy service companies. Bullish engulfing here, bullish engulfing today. That is uber strong. We didn't even really get a pullback out of this. I was looking for a pullback down here for some degree of a pullback. But I don't know if we're going to get it. This looks uber strong. This looks like it wants to go Hulk strong, upside, see ya, wouldn't want to be a type of movement. So I'm getting pretty excited about this. And hopefully we get some strength in crude oil prices and we see these guys start to take off. Remember, we have broken out of massive downtrend lines. And that is the first step, is to break that downtrend line. Once we get moving, it's going to get moving. So I like this. The setup looks great. Uranium, the futures pricing. Let's go to the weeklies here. Still looks good. I don't see too many much selling pressure up here, guys. I know people are getting bored to death. It's a long plane ride. People want to see their investments move up. I understand that. But everything looks bullish. There's nothing here saying, well, wow, I should be concerned about the large selling pressure. There's no selling pressure up here. So I think we're just pausing and waiting for the right moment to hit the gas. Sprott Physical Uranium Trust is heading a little bit lower. We're getting a little bit more selling pressure today. We still have good support underneath us. 1575 or so is what we want to stay above. And then looking at URNM, URNM is also getting some support, up 0.57%. And we're going to probably try to turn this guy around here at some point. But we've got a lot of support underneath us. We've got some $61, $60-ish in that type of area if it decides to pull back that much. If it decides to pull back that much, I'm going to pull some more triggers and buy some. That's just what I do. I buy off support levels. Looking at TAN, TAN also getting some strength today. 3.7% bullish engulfing. That actually looks good to make a move higher. We also have a bullish engulfing here and a bullish piercing here. Those are all bullish formations for a move higher from a statistical standpoint. This also looks bullish on the long term. Consolidation, consolidation. We cut this in half. The right side going back up mirrors the side going back down. You hit the same resistance levels as it bounces and hits resistance levels and then has to break through those resistance levels. Those resistance levels are more or less just selling pressure in these areas. We have to break through that selling pressure to get to the promised land that at a higher level. COPX also doing a very similar move to SPWR or TAN. We're right at support. We have an up day today, and we're just kind of moving in this consolidation zone. But overall, I think copper looks incredibly good if you take a longer term perspective and look at the market deficits out in the future. Copper is supposedly, the transition metal. This is the new oil, is what they say. I completely disagree with that outlook, but I do think copper is incredibly important and is a transition metal. I don't think it's the new oil, so to speak. Oil is the master commodity, and copper is not going to replace oil. Looking at lithium, lithium getting some buying pressure today. That is a bullish piercing, putting in some good work there today. It's looking a lot better. REMX also on support, and it's just resting there on support of this long-term support line. We're just resting on it. Usually that's a good spot to be looking, and usually that's a spot where you can jump off that support for a higher move on up. SPX heading lower today. I did use this on something to show you guys a comparison. I'm going to get that out of there. But we're heading lower. We're at that midline kind of support level. We'll see if that thing holds. And we're also lower on the NASDAQ. Why are these lower? Higher interest rates, higher dollar. It doesn't like that. It does not like it at all. It doesn't like higher interest rates. You can't, when you can have a risk-free return on bonds and people, you can just go look at other channels, look at these I bonds, look at all these bonds. People are wanting to run into bonds because of the interest rates moving higher. They are less willing to speculate in the S&P 500 and the US Composite Index. So you're going to see these guys go down. You're going to see more money funnel into some of these bond instruments. Now, does that mean that bond prices are going to go higher? I wouldn't jump that far yet. It depends on how much inflation is out in the system and if we still have real negative rates, which we do. So the real negative rates is still dissuading a lot of money from investing into bonds and even into stocks. And it's going to, I think, rotate and flow into commodities and precious metals for a good long period. I don't think bonds are the spot to be at this particular time for a longer term play. In the short term, it may be all right because I think that we're going to see high inflation rates. We could see a problem in the market if we lose the housing market, which I'm not saying we are. We have to look at the data. If we lose the housing market, then bonds will be good. But it will only be good for the short term because I don't think these structural problems are fixed in the market. And I don't know if we're there yet. We may have a lot more inflation ahead of us that people are not seeing yet. Think of the Strategic Petroleum Reserve releases that are tampering down oil prices, and also think of the Freeport terminal being down, which is also natural gas prices. EEM, stronger dollar. This is shaking off that stronger dollar. EEM is looking quite strong here. It actually looks very good. Whenever you see a divergence between the dollar and EEM, then you know this thing is strengthening. I think oil is strengthening and people are positioning in oil companies, or energy companies, I should say. And I also think this looks good here and what it's doing in terms of the price action. XHB is following the overall markets with those interest rates going up, does not like it, heading a little bit lower. But overall, it still doesn't look horrible. It actually looks very good. I know. What am I talking about good? We've got this strong support resistance level. We used it as resistance on the downside, trying to break through it. We broke through it. Now we're going to use it as support. I do think that we're probably going to come back here, touch it, and go higher. Why higher? Because the imbalances in the market still exist. Just because people can't afford it this second doesn't mean they can't afford it in the future, and doesn't mean that interest rates will remain high forever. There needs to be a balance between interest rates and affordability and housing. And I think that will come out in the future at some point, and I think it's going to be soon, over the next year. So we're seeing a slowdown in the markets. We're seeing that stimulus money work its way through at a higher inflation rate, which is pushing pushing the interest rates pretty high. Will it come back down in 6 months? It very well could. We could go sideways in housing for a while at the 1.2, 1.3, 1.4, 1.5 housing starts per year, or that's per day, I think. Whatever the unit of measure is, sideways for a little while. And then we'll work our way higher again. Moo also getting some selling pressure, very similar in the chart pattern. Big, strong support down here. Are we going to head back down? It's possible. We had a nice big down day with some buying pressure. I know some of the fertilizer companies released earnings today. They must have released something that people don't like, or they gave forward guidance that people don't like. I saw Nutrien was down, and some of these other companies, the big guys in the fertilizer companies. Copper heading a little bit lower today. Not too much of anything to really worry about. We're still heading sideways. I do think this is going to go higher eventually with the market deficits out in the future of copper. Lumber also heading lower, but we got that nice little hammer pattern. We grab the handle, we can do some beating down, and I still think it looks good. We're still above that support level. Everything looks okay. Iron ore firming up a little bit today. Again, we've broken out to the downside here. I wouldn't be bullish yet. This is a major sell-off day there. I should say sell-off week. Major sell-off week, we could come up and bounce and roll back over again. So I don't think we're out of the woods just yet. I'd be patient here and see where we go. Aluminum holding steady. We're right on that support level. We've been playing with that support level for a little while. We're just grinding sideways. I do think this will eventually turn its way on up. And I think that we're going to have problems in aluminum because of all the smelters being down in Europe. The Baltic Dry Index heading a little bit lower today. Looking at the big picture view, still looking all right. We do have kind of a kind of wedgish type formation popping up here. We'll see if anything comes of it. I'm not stating that that's necessarily a strong wedge or anything, but I'm watching it, just seeing what's going on. But the Baltic Dry Index did sell off. And then coal is firming up a little bit today. I'm not saying it's a reversal point or anything, but it is firming up a little bit today, up 0.56%. You can't really see it on this chart, but little guy there. So overall, guys, I'm really bullish in energy, oil services, natural gas. Those companies look ultra strong, which means, that's your opportunity. And if you guys need help on figuring out what opportunities those are, if you want leverage to this price move, what is leverage? If you want oil to go up a little bit and you get a big price move to the upside, I've got companies in my portfolio that are identified for those moves. I've even talked on the website about the fractals. The fractals are a pattern, and the size of those patterns is kind of like the DNA of how much this stock will move to the upside of a price move. So it's how volatile a stock is and how much, we'll say, leverage it has. I use the word leverage, how much volatility it has to the price move of the underlying commodity. So I have a lot of companies that I think will put money in our pockets at copious amounts, hopefully, or money in my pockets, for the companies that I've selected. So I chose some pretty well leveraged, and you get the leverage by the debt that they potentially have and where they are in terms of how high of a cost of producer they are. If you've got large amounts of debt and it's a high cost producer, and the price of oil or natural gas or whatever the commodity is goes above that cost curve, they really start making a lot of money. That's what gives you that leverage. They're not making anything before and they go to making a lot of money. That means that you have an infinite, if you look at the math. If you're not making anything and then all of a sudden you're making a bunch of money, you have an infinite leverage to move on up. So some of these go up 20, 30, 40 times to the upside, depending on where you bought it and the leverage of that company to the price move of the commodity. So those are things that I have identified all on the website. If you guys are interested, definitely sign up for the Platinum membership. So that's what I've got for today, guys. Hopefully you guys are doing all right in the markets. Give me a thumb up for the content. Subscribe to the channel and the website if you haven't already. Join the community, guys. We are, it's pretty fun. We talk about a lot of good stuff, and I think I will drastically accelerate your learning. I'm not a short-term trader. I invest for the long term, and what I'm looking for is the value in the market and how to capitalize on that value. The first thing is to identify where the value is. The second thing is to figure out how to play it. Those are the two most important things. Value is pricing assets. So if you know what's cheap and what's expensive, you buy the cheap, you ride it till it's expensive, and you need to know the vehicles in order to do that. What are the best investment vehicles? All right, guys, we'll catch you next time. This is Finding Value.